Welcome to the channel, investors. Amazon has just released their earnings and we are going to be going through them today. The market has acted very favorably towards it. You can see it's up 16% in the post market to over $3,224 a share. So what I'm going to be doing today is going through their earnings, giving you the updates. Then I will be giving my new fair value of Amazon using discounted free cash flow and the Buffett-Graham intrinsic values based off this earnings release. Is this stock a buy in 2022? Let's have a look at some of the highlights here. Let's just go to the news. So Amazon stock soars 15% after earnings, will hike Prime membership fee. And these are the top and bottom line results for the fourth quarter of Amazon. Earnings per share, $27.75 versus $3.77 expected. That is quite low. I'm not sure if that's a typo, but regardless, they did beat expectations. Revenue did not quite beat expectations, $137.4 billion to $137.82 billion. And AWS net sales are up $17.78 billion against Wall Street's estimates of $17.23. You can also see here that the Amazon Prime e-commerce giant announces a fee hike on its yearly delivery. So let's get into my steps and then we'll go straight into the earnings. Amazon currently has a market cap of 1.6 trillion. Obviously this is going up. Share price, this is in the pre-market, so it's around about 3,200 and they do not pay a dividend. Let's have a look at the PE ratio. Is it less than the market? No, Amazon has a high PE ratio of 54.3 compared to 25 of the market. But let's go on to the revenue. Is revenue increasing? Yes, it has. From this time 5 years ago, 232.8 billion versus 469. Very nice indeed. So let's have a look here and we will go to the net sales. So you can see here, this is the 3 months ended December 2020 and 2021, and then we have the 12 months. Net product sales are up on the quarter, 71.4 billion compared to 71 billion in the 3 months ended. If we compare to the 12 months ended, 2021, 241.7 billion versus 215. So product sales are up. Now let's have a look at their net service sales. For the quarter, previous year, 55 billion, now is 65.9. And on the 12 months, 170 compared to 228. So up massively, 386 previous year and now 469. This is how they are broken down. It's split into North America, International, and AWS. I'm just going to be looking at the 12 months here for the speed of the video. So net sales in America was 263 billion, now is up to 279. The net sales of International has increased as well, not as much as North America, but still looking good. 104 billion to 127 billion. But we will look here. Actually, they did make a loss because the operating expenses are higher. So we're going to touch upon that when we go into profit. And AWS, well, the news article said this was up 45 billion up to 62, and the expenses haven't increased that much. And as I said, we'll go into the profit in a second. So revenue is looking great for Amazon. Next, we want to see if the profit is increasing 10 billion to 33. So this is massively up. Net income is the total sales, take away all the expenses and then interest. And we can see here that we get the net income of 33.3 billion, up from 2020, which was 21.3, and the quarter is almost doubled in the same time. 7.2 for 2020, December is 14.3, so up massively. And if we look at the individual segments, North America is actually down from 2020 compared to 2021, 8.6 to 7.2. Expenses are up massively in that same time. International, I said this was a loss here, 700 million to almost minus a billion. But AWS is the powerhouse of Amazon underneath all of this. 31 billion in costs compared to 43. So that is 13.5 billion to 18.5. So AWS is their most profitable part of their business. Over twice the amount of their North America sales completely. Can you please give a like on the video, guys? It really helps me out, gets this video to as many people as possible. Now let's go on to the next step. Are the shares outstanding decreasing? No, 480 million to 506. And if we just look at the statements again, they have increased it here. This was 2020 with 500 million and now 506. So Amazon are issuing new shares. Not necessarily a bad thing as long as they use that capital to invest back in the business and make it more profitable, then drive shareholders' prices up. That will be fine, but they don't want to be just doing it for the sake of it. It can negatively affect shareholders. And finally, is the free cash flow increasing? No, it went from 17.2 billion to 9.1. Let's go back to the financials and see the reason for that. They have Outline the free cash flow at the top here. You can see the free cash flow has decreased to an outflow of 9.1 billion for the trailing 12 months compared with the inflow of 30 billion for the trailing 12 months ended in December 2020. How do we get free cash flow? We go to the cash flow statement and it is net cash from operating activities minus capital expenditures, which is purchases of property and equipment. And we can see here that the net cash from operating activities is actually down from 2020 compared to 2021, 66 to 46 billion. But these purchases of property equipment are up almost 20 billion from 40 to 61. So it'll be interesting to see what they're actually doing here and why this is decreasing over those 12 months. But definitely something to be looking at and will be taken into account for the discounted free cash flow model. So overall, that is only 2 passes and 3 failures. The only 2 passes were increasing revenue and increasing profit, which for a company is not the worst thing in the world. That is good to see that they're increasing. Free cash flow ratio, which is the market cap divided by free cash flow. Market cap is around about 1.6 trillion, 9 billion free cash flow. That is a very, very high multiple, much higher than the P ratio. So let's go on to my discounted free cash flow models and the Buffett-Graham intrinsic value. So firstly, we have calculated the future free cash flows, discounted them to today, and this will give us a fair value of Amazon based on discounted free cash flow. So actually, this says that the stock is slightly overvalued. It was fairly valued before earnings because this was about the price it was, but with 3,200 a share, it does say Amazon is a little bit overvalued at the minute. Now let's have a look at these numbers. I did take the free cash flow of 2021 into account when calculating these because this was a bit of an outlier. And this is even with them getting 40 billion in free cash flow in 2022. So discounted free cash flow is saying the stock is overvalued. Let's have a look at the Buffett-Graham intrinsic value. This takes earnings per share and expected growth rate into account. As per Google, the earnings per share is 51.14 and expected growth rate from analysts is 34. This says the stock is a buy with a fair value of around about $4,000 a share, which means it's currently still trading at a 21% discount. So if we were to average these out, you can see that it is a buy, but only slightly. Discounted free cash flow model does not like the stock as much because of the decline in free cash flow in 2021, but the Buffett-Graham intrinsic value with earnings per share and expected growth rate does like this stock. Now let's have a look at some of the technicals here. Firstly, I've added some moving averages, the 50-day in green, the 100-day in yellow, and the 200-day in red. And we are on the yearly. So what are we seeing here? Well, you can see the price has dropped below all of the major moving averages, but is now at about $3,200 a share, which is on a strong upside. The last time the price dropped below the 200-day this much, in fact, if we go back, it really hasn't. This has been a pretty unprecedented move for Amazon, so it's good that it's rebounding pretty strongly. This would probably be a buy signal, but it is bearish that the price is still below all of the major moving averages. The 50-day is the lowest, which is negative. The 100-day is the next lowest, and then the 200. So these are negative signals in terms of the moving averages. Next, we are looking at the MACD. You can see that the signal lines have swapped here, and they're about to swap again once the start of trading goes. So this would be your buy signal right now. Amazon has not been this low on the daily MACD since a long, long time, actually. I'm zooming out to 2014 here. You can see it's not been as close. There hasn't been this much negative momentum. So this would look like a buy signal because it is so below. But obviously the bearish signs are here that it's very, very low, minus 120, minus 121. But it is about to flip the opposite direction, which would be your buy signal. Now we're looking at the relative strength index. This tells you if the stock is in overbought or oversold regions. And you can see Amazon is in oversold regions. This is the biggest daily dip since August of 19. Even at the pandemic, it was not oversold as much. So that would be a buy signal because when Amazon does get this low, you can see it's rebounded pretty strongly. Did it here in 2018, and it did go on a bit of a downward sweep until eventually shot back up. And if we also look at the weeklies, which I do like to look at for RSI, you can see that this is actually the lowest it's been since 2009, 2008. So that would have been a heck of a crash for Amazon there. So I would say this is a buy because it should be dropping back. Amazon usually trends around this level in the middle, so it's expecting to shoot upwards. Right guys, thanks for watching the video. Please give a like down below. Give me a comment on your thoughts on Amazon, and I will catch you guys. Oh, subscribe if you're not already, and I'll catch you guys next time.